All right, well, not a huge amount to talk about, y'all. Not a lot of changes in interest rates over the last 30 days or so. We're going to get into what has moved the markets, where they are today, kind of give everybody an update. Let's dive right into the numbers. Mortgage News Daily has a 30-year fixed rate conforming loan today, national average 6.32%. Y'all, that's pretty much where it's been for the last 11 days. We have seen the bond market just kind of dead flat as it wrestles with some realities associated with the war in Iran. We're going to talk more about that in a minute. So today, 6.32 is the national average according to Mortgage News Daily. 1 week ago, we were at 6.29, so pretty much unchanged. We're still better than we were a month ago. We were at 6.55 30 days ago. So about not quite a quarter of a point better, eighth of a point or so better than we were 30 days ago. Here's the thing, y'all. The markets are just discounting all reporting. They're discounting CPI, PPI, employment. They might have little temporary reactions to those reports when they come out, and we saw a little bit of movement in the bond market, but then it goes back to this baseline because the price of oil and energy and the flow of energy predicted to come in the future through the Strait of Hormuz is impacting the markets and trumping everything else. Until we get to a more stable geopolitical environment, y'all, this is what we're going to be stuck with. The bond market essentially has just, with the current pricing, it's just like we're all going to wait and see. We're just going to wait and see what happens with the cost of energy. Here's what we do see, y'all, that may have impact long term, however, setting aside the geopolitical stuff. The DOJ has dropped its investigation into Jerome Powell today. That's big news because Thom Tillis was holding up the nomination of Kevin Warsh. He wouldn't even allow Kevin Warsh to be voted out of committee with this investigation in place. Thom Tillis has been extremely critical of the Trump administration and has really dug in his heels on the notion that this was a politically motivated investigation into Jerome Powell because he wasn't doing the bidding of the president. Here's what's interesting, y'all. I don't expect that Kevin Warsh is going to do the bidding of the president either. He made it clear in his testimony before Congress that the president asked for no such concessions from him and that he certainly would not give them as far as committing to a future cut. And here's the thing about Warsh, y'all. Warsh's background, frankly, is more fiscally conservative than Jerome Powell's with regard to what the Fed spends, how the Fed acquires assets, what the Fed holds on its balance sheet. Kevin Warsh is on record as clearly stating he thinks the balance sheet for the Fed is way too big. He would like to unwind some of that balance sheet. Here's what that means, y'all. When you push fixed income securities back into the marketplace by allowing them to flow off your balance sheet, you're increasing the supply. When you increase the supply, the price comes down, the yields move inverse to that. So when Kevin Warsh says he's going to decrease what the Fed holds in the way of assets, what he is actually saying is, I'm going to bring higher interest rate pressure to bear. Now, he's going to attempt to offset those with some cuts in the overnight rate. But y'all, the truth is we're not going to see much change in interest rates with a Kevin Warsh sitting at the head versus Jerome Powell. He may give us some headline cuts, but without the policy behind those cuts of actually either buying more in the way of bonds through quantitative easing or restricting the amount that the Fed sells off their balance sheet or allows to run off of their balance sheet, we're not going to see a significant change in interest rates, and they could actually head the other way to a degree. When you look at Fed futures, they agree. Fed futures do not have a rate cut by the Fed priced in until the September 15th meeting. That's the first time that you see a meeting. This is September 15th of 2027, y'all, not this year. So we're looking 15, 18 months down the road before we have even a 50% chance of the Fed cutting interest rates according to Fed futures as listed on the CME FedWatch tool. So the markets are cognizant of the fact, y'all, that we're not going to see a big shift with Kevin Warsh at the helm. I will say the markets, though, will probably like Kevin Warsh leading in that way because we've needed fiscal responsibility in a long way, y'all. We got, for a long time rather, we got handed our hats over the last couple of years with regard to inflation, and it was Fed policy in 2020 and 2021 that gave us the lion's share of the increased monetary supply that led to the inflation that we are still dealing with to a degree. So having somebody more fiscally responsible in that role will be good for us long term. But short term, if you're waiting for interest rates to drop as a result of Kevin Warsh taking the helm, I don't see it, y'all. I just don't think that's going to happen. So let's buckle up. Historically, rates in the low sixes, pretty good place to be, y'all. It may not be great compared to the last 8 or 10 years that we've enjoyed such low rates, but you could make a strong case that those were subsidized events and not necessarily market driven to the degree that we're at now. So low sixes, not anything to sneeze at, y'all. And if rates do improve, obviously, refinancing is a thing. Happy to do that. Happy to help, happy to guide in any way that we can. We do mortgages for a living here, y'all. We appreciate your referrals very much. Very blessed to have a record May in the books already, so thankful for that. Appreciate everyone that has trusted us over the years. Always honored to have you continue to do so. Stay blessed, stay safe. We'll talk to you next week.